All right, let's take a look at some of the stocks that are trending after hours. We've got to talk about the regional banks. First Republic Bank, Charles Schwab, Zions Bank, Bancorp have really been on the move the last several days following the collapse of Silicon Valley Bank last Friday, and then also what we saw at Signature Bank over the weekend. First Republic Bank closing off the last 2 days, a loss of 67%. Even today, we were looking at a loss of nearly 62%. That five-day chart really illustrating the downward slope that we have certainly seen, at least in extended trading, recouping some of those earlier losses, really just a fraction of it. We're seeing similar pressure in Charles Schwab. Now, over the last 5 days, that stock off just about 32%, closed today off just around 11.5%. So pairing some of the steeper losses that we saw during the intraday trading after the bank did come out defending its portfolio, trying to reassure some of that skepticism that's out there from investors. In extended trading, we're looking at gains of just about 1%, and Zions was off 25% today, moving slightly to the upside in extended trading. Of course, these are all among our top trending tickers here at Yahoo Finance. That has been the case for at least the last 24 hours, likely will be the case going forward here as the fallout and we work through some of the latest headlines and pertains to Silicon Valley Bank and also Signature Bank. So very important stocks to keep an eye on here. Let's also talk about United Airlines. Switching gears here just a bit, the company out with updated guidance, and we're seeing the disappointment reflected in extended trading with the stock off just over 6%. The company now says that it sees its Q1 adjusted EPS loss of 60 cents to $1. One of the reasons for that, some of the expenses related to a new collective bargaining agreement with Airline Pilots Association. Originally, they were expecting that charge in the second quarter. They moved that up to the first quarter. That's why we're seeing the stock under pressure, off just about 6.5% because of that revised loss per share outlook from United for the current quarter right now. The company, though, saying that it does still see strong demand environment, now expects Q1 operating revenue to be up about 51% compared to the level that we saw during Q1 2022. But that movement forward here from the quarter for its new collective bargaining agreement, the expenses there dragging the results potentially lower here in the current quarter. That's why the stock's off nearly 7%.